time to talk business. The Central Bank of Nigeria says money supply in the economy is at its highest level on record at almost 49.3 trillion naira in August, topping the previous record set in May 2022. According to the Apex Bank, money supply is now at a 9.9% gain from December 2021, where the country recorded 44.4 trillion naira. In its last Monetary Policy Committee meeting, the Central Bank explained the growth in money supply was due to an increase in net domestic assets. The CBN also mentioned that the recent rate hike could help slow down the pace of money supply, though analysts believe this will take some time to occur effectively. Meanwhile, Nigeria's Minister of Finance, Budget and National Planning, Mrs. Zainab Ahmed, has disclosed that the Nigerian government is in talks with the International Monetary Fund (IMF) and the World Bank to restructure the country's debt. The minister has also revealed that the country is considering tapping from IMF's newly created food shock window that allows member countries to access emergency financing instruments. Speaking on the sidelines of the ongoing IMF and World Bank annual meetings in Washington, D.C., Mrs. Ahmed noted that the country is considering borrowing from the recent window created by the IMF for countries facing urgent balance of payment need related to the global food crisis. Commenting on the 2023 appropriation bill, the minister said the plan and the medium-term economic framework for 2023 to 2025 and the 2023 budget scaled down on the subsidy that the government has to carry, adding that the country was targeting a 3.7% growth for 2023. To other stories now, the federal government has revealed it has no plans to sell the Transmission Company of Nigeria, urging the public to dismiss statements regarding a non-existing plan to privatize the government-owned power firm. According to the Federal Ministry of Power, some of the reports falsely claim that the said privatization was going to take place in the coming months. It reaffirmed that as part of the repositioning of TCN, job opportunities were being created, contrary to claims that there was a plan for mass disengagement of staff at the company. The ministry also disclosed plans by the government to upgrade, stabilize, and modernize Nigeria's power industry through various interventions, including the Nigeria-Siemens partnership under the Presidential Power Initiative. Away from the power sector, Nigeria's transportation experts say the nation is currently hindered by enormous infrastructural gaps that prevent it from exploiting its abundant natural resources. At the Lagos conference of the Chartered Institute of Transport and Logistics in 2022, this was the topic of discussion. And TVC News correspondent Ifunaya Eze tells us more.
The event focuses on sustainable innovation in global logistics and transport. For a competitive transport system, experts from across the transport and logistics subsector emphasize the need for capacity building and constant training.
We need to make sure that personnel are trained and there is capacity building for the players in the industry. That players in the industry, especially those who are interested in ownership of ships, have the means of acquiring those vessels, and that the operators of the vessels will be trained.
There was a call for timely investment in emerging technological innovations related to transportation equipment, methods, and practices.
We must make sure that we deploy technology and that there are people, trained personnel, to man those technology. For example, things like cargo tracking, okay, haulage system, to ensure that we have a single window so that our ports can be decongested. You can stay at home or in the comfort of your office and do your bit.
Council for the Regulation of Freight Forwarding in Nigeria was recognized for its contribution to the development of the transport and logistics industry at the two-day event. Ifunanya Eze, TVC News, Lagos.
Let's turn to global markets now. As Asian stocks followed Wall Street's decline, and crude oil stayed weak today as investors weighed the risks of global recession amid hawkish Federal Reserve rhetoric and uncertainty about the Bank of England's commitment to stabilizing markets. MSCI's Products Index of Asia-Pacific shares lost 0.57%, languishing close to Wednesday's half-year low, and Japan's Nikkei slipped 0.48%, while South Korea's Kospi slid at 1.15%. Hong Kong's Hang Seng Index dropped at 1%, and mainland China's blue chips lost at 0.28%. FTSE futures pointed to a 0.18% decline at the open, and German DAX futures signaled a 0.35% retreat. U.S. mini stock futures offered some slight hope, though, rising at 0.1% following a 0.33 decline in the S&P 500 from overnight. The average interest rate on the most popular U.S. home loan rose to its highest level since 2006 as the housing sector continued to bear the brunt of tightening financial conditions. According to latest data from the Mortgage Bankers Association, the United States, mortgage rates have more than doubled since the beginning of the year as the Federal Reserve pursues an aggressive path of interest rate hikes to bring down stubbornly high inflation. Those actions are designed to cool the economy sufficiently to curb price pressures have weighed heavily on the interest rate sensitivity housing sector as expectations for Fed tightening have led to a surge in Treasury yields, with the yield on the 10-year note acting as a benchmark for mortgage rates. The data also shows that home building and sales have weakened significantly in recent months, with home resales posting 7 straight months of declines. However, home prices remain high even as house price growth slows, eroding affordability for buyers who are still competing due to a shortage of properties for sale. Let's wrap things off now with oil prices on the international market as it firmed today, finding continued support from an OPEC Plus decision last week to cut supplies, as the International Energy Agency warned that those cuts may push the global economy into recession. U.S. West Texas Intermediate crude recorded an upward price margin of 0.28% to sell at $87.47 per barrel. Brent crude futures sell for $92.75 per barrel, with an uptick of 0.32%. Body lights maintained the red zone, selling for $94.23 per barrel, with a price decline of 1.41%, while the OPEC basket crude oil dealers offer $97.43 per barrel, with an upsurge of 0.00%.